Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. I hope you're having a phenomenal day. Wow, what happened yesterday? Well, pretty much expected. There's no surprises with that tariff news going bad. I mean, really, any type of tariff is terrible, so that's half the reason why we shorted that coin. This coin, we really didn't short anything else. Hindsight's 2020, should have done so more on a lot of altcoins. They dumped really hard. We hit about 44% in 22 hours there on our Bitcoin short. That was a 10x leverage short from 87,000 to roughly 81.5. So that's just kind of, it is what it is, right? So if you saw my video from yesterday, you'll know why I explained that. All the TA was pointing up, but the manipulation was pointing down. And generally speaking, lately, you can do very good things in trading if you are paying attention to market manipulation. In fact, if you take a look here at liquidation, the price wicked up to like 89,000 to trap late longs, and they just got destroyed after that. It is so funny how crazy that is. And unfortunately, those who shorted with high leverage probably got liquidated and the price came down and they missed out on all that profit too. So all the more reason to use low leverage, low position size, folks. Don't get crazy with your trades. All right. So hit that like button. Let's go ahead and take a look at the last 7 days of liquidation here. Pretty straightforward. We got a lot of late longs here at 81,000. You just got to recognize this being a double bottom, decent chance that we see the price recover from here, but also getting closer to that lower level we've retested already, we could very well see the price action break down. So the simple way to understand it, there's a lot of liquidation from a macro perspective. Each one of these red bars is about 8 to 10 billion, by the way. We can see just chunks of money here, right here, risking liquidation between 78.5 and 81,000. Okay, so just know that that exists. It doesn't mean it's going to happen per se, but it does imply that we're close to that level and that range. We start to break down, get closer to 81K. I think we're more likely than not going to see the price continue lower. So pay attention when we get back in that low 81K range. Between now and then, I think longs are tentatively safe as far as watching them close and using low leverage. Don't be an idiot that puts everything into 82,000 and tries to go to the moon because you want to post on social media how great you are catching the bottom. No one cares about that anymore, right? At least I know I don't. And even though I don't watch anyone else or pay attention to anyone else's social media, it's still something that you shouldn't be doing. Trade for you, trade for your portfolio, and don't try to trade for other people. Having said that, liquidation delta is obviously in the red. We're in the red here effectively at minus 5 billion. So we went from a high of roughly 15 billion with that little peak there to basically minus 5 billion. So that's a $20 billion shift in liquidation delta from longs to shorts. That's quite significant. So taking a long right now, in all reality, is probably a high risk. You generally shouldn't do so, and I wouldn't recommend that. Even though a moment ago I know I said longs are on the table, it's only based on manipulation and the simple fact that they're trapped a lot of late shorts and they're probably going to pump the price action up now. That's just generally how it works. So bear that in mind. All that being said, 85.5, roughly 87,000. There's some upper open interest areas there. We know that because a lot of folks were taking late longs at that range, but they're now underwater. So we're going to see some exit liquidity if we do come back up to 85 to 87K. Daily time frame, what's going on here? Well, this is probably going to look pretty bad because it looked bad in the first place. We're still haven't broken our descending trend line, folks. So even though yesterday was peaking above, that's that manipulation that we see so common. Unfortunately, that got destroyed. All that late liquidation too, also. They're melting faces in both directions. So late shorts, early longs, whatever the case, you pretty much can't win in this market unless you time it perfectly. Or you use low leverage, you have a good margin, and you're not overdoing it. You can survive those ebbs and flows. Because, for example, our short at 87,000, if we were using 20, 30, 40x leverage, we probably would have got liquidated with this wick up to 88.5. Instead, kept the leverage low, rode it out, hit a good 40+% on that trade. So once more, it just depends on who you are. That really makes a big difference here. And what I mean by who you are is just, are you going to fall for these tricks, or are you going to be a little more patient and not use high leverage? Because everyone, it's like a meme now of those who use high leverage. I just think it's really sad and pathetic. Either way, anyways, I'm sorry. We're not here for that. We're here for the TA. Let's talk about the daily time frame and recognize here that we're still under 50 on the RSI. Until we get above that level, really no trade is the best trade, or more importantly, considering shorts. Now, it's not to say you couldn't still find some really tight longs between now and then. I think 84,000, we may see that revisited. I'll show you on the charts as to why I think that, but for stochastic reasons here or MACD purposes, there's a lot of shifts of momentum pointing down and identifying that we continue lower. And that's the kind of trend you want to presume is going to continue, because if you see here, we're on the edge of a cliff, like 82,300, right where the price is at right now, is that lower level has been tested 1, 2, 3, 4, 5, now 6 days in a row, okay? The likelihood of further downside is greater because of that, right? Because we continue to retest that range. So it's not a good look for Bitcoin. Having said that, though, we can see significant amount of volume to the downside here. We're now under 50 on the RSI, stochastic swinging down. We're under our moving average underneath every single SMA. There is no reason to take a long position, honestly. However, if you do take a long, low leverage, low position size, there could still be some benefit here. Don't get me wrong. And the main reason why I say that is because we can see massive overextensions. Every time we see one of these green bars here, that tells us our moving average range percentile is extremely overextended. So that really implies that a slight relief rally makes sense. We got a bit of a fair value gap up here, but just know that this descending trend here based on local moving averages, we're more likely than not to kind of continue lower inevitably. Okay, it's just kind of one of those things. Now, what would discontinue that, an invalidation of a short position, would be a closure today above, I would say, 84,000. Mainly because 84,000 has proven to be that previous support range. It's also this 0.382 fib level. All the moving averages are kind of hanging out right there. So to me, best case scenario is the price comes up to 84K and back down. I think if, just shooting from the hip here, a short at 84,000 seems like a practical consideration if we even see that, okay? And what that would do for us, just say hypothetically we do that today, it would be perfect timing for a Friday, Saturday, or Sunday dump, right? We've seen those time and time again. Literally, if you haven't looked at the statistics, I think we're 13 out of 14 weekends have been red this year, okay? So the odds of catching that hero play on the weekend with a long position isn't really the best call. So I'm going to wait for a better consideration of a short where the price action comes up to the local tentative resistance, this descending trend. I think there's a lot of confluence here at 84,000. That would make the most sense for a short consideration. Between now and then, if you do end up taking a long, just make sure you use low leverage, watch it closely. There's a decent chance it will recover to that level. But once more, that's simply based on manipulation and not based on technical analysis. There's nothing here on the TA that says you should take a long. However, there was nothing there yesterday that said we should take a short either, and it dumped, right? That's a fundamental catalyst. Right now, it's in everyone's head that we're going to be in trade wars and all that crap. So the likelihood of dumping is quite high. So again, if you do take a long with whatever coin, ensure that you watch it close and you adjust your stop loss higher into profit. That's just the best way to go. All right, folks, I hope that makes sense. I described it correctly. I deeply appreciate you watching. Thanks so much again for always hitting that like button, commenting below. Join us over on Twitter, Telegram, and Discord if you want to stay abreast on some technical fundamental data. I kind of let everyone know yesterday this is going to happen, and sure as heck it did. Once more, folks, this is not rocket science. This is just standard human behavior. Market makers are going to do what they do because they make tons of money off of it, and most of us are just sitting on the sidelines like, what the hell just happened? Anyways, all right, folks, have a good one. We'll see you again soon. Take care out there. Bye-bye.